Mihir Vora is with us. He's Chief Investment Officer at Trust Mutual Fund. Mihir, good morning. Great to have you with us here on the program. Thanks very much. Just your first take on markets. You know, price action is slightly negative, but I guess markets have, over the last few years, with so many conflicts, have learned to kind of ignore or live with these conflicts and look ahead a bit more optimistically. So the mood's not really dulled out. How are you feeling, Mihir?
Certainly. Good morning, Prashant. Thanks for having me. You're absolutely right with the market over the last 20-25 years has gone through that, huge learning curve, which is the fact that India is such a large, market, geographically also so large that, we are quite resilient. I think the biggest change that has happened, I would say in the last 10 to 12 years is the fact that we've actually managed our macro very, very well compared to the rest of the world. For example, India is the only country which has reduced its debt to GDP in the last 10 years, even through COVID, etc. So the point is that our currency, our current account, our fiscal, all are looking excellent in terms of the relative scheme of things if you compare it to any developing country as well as the developed world. More importantly, I think structurally now people realize that India may not grow at 10%, but now China is not also growing at 10% anymore. It's probably more close to 4 to 5%. So India will actually be the fastest growing economy in the world. So whether it's the domestic investor sentiment, whether it's the FII sentiment, India stands head and shoulder above a lot of other options out there in the market. And as we keep saying, the local investor has finally come of age. The SIP flows, the pension fund flows, the EPF flows, the insurance flows are now structurally, out there in the market. We are seeing hundreds of thousands, millions of investors getting added to the base every month. And that's what's, I think, keeping the overall sentiment up. We can talk about, the micro and the short-term situation where it's a mixed bag. But in general, I think the structural India story has only become stronger over the last few years.
So in that case, what would be the sectors which you believe would outperform? What specific stocks are you backing, Mihir?
Sure. So, as we have discussed so many times in the past, we continue to believe because India's domestic story is far better than the global story, we will continue to stick to the domestic plays, whether it is, in financials, lenders, as well as the capital market link plays, the savings link plays, whether it's the infrastructure and, capex story, both from the government spending point of view. And now we are even seeing green shoots in the private sector capital expenditure, and plus the special areas like railways, defense, etc., that the government is very, very sharply focused on. The mixed bag, I would say, is in consumption, where FMCG, of course, is a lower growth segment. Urban consumption, which was holding up, is kind of maybe not picking up as well as expected. But structurally, I don't think there's a problem there. Over the long term, it should do fine. There is a lot of premium discretionary consumption that is doing quite well even as we speak. So I think premium domestic consumption, savings link plays, capex link plays are something that we would continue to be overweight. Pharmaceuticals, etc., we would be more, healthcare, pharma, we would be more stock specific. And, IT in general, we are underweight because it's more of a global play. Especially the large cap ITs are probably, low growth stories, not as high as they used to be. And of course, the steady growth utilities, etc., with 10-12% growth, we would be underweight because we are looking at higher growth stories.
Okay. Hi, Mihir. Since you briefly mentioned capital market plays, which side are you drifting towards with regard to the stock exchanges? BSE and MCX have been absolutely on fire. They've re-rated. Valuations have got very, very expensive out there, but there's still so much of interest. Now, this morning, you have some negative read-through for BSE, but the stock still is seeing buying at lower levels. What's your preference between the listed exchanges? And also, if you want to put in a word on the unlisted NSE stock, which has done a jig of its own.
Sure. So I think I won't comment on specific stocks, but I think the stories that we are playing is basically not only the growth of the pie, the trading pie is going to increase, whether it's, from the established exchanges or from the challengers. But more importantly, we are also in some cases playing on newer product introduction, market share gains, etc. So these are stories where we can get the benefit of the tailwind of the industry growing, as well as product improvement, market share gains. So those kind of stories we are playing in our portfolio.
Just a word, guys, with regard to Orient Cement, there was an open offer, so there's a particular number of shares that get blocked, right? So the open offer is out of the way, the kind of support that you've seen because of the open offer. So it seems that the remaining shares could have possibly got released, for being made available for trade. So that could be one of the reasons. And also in the past, when Adani Cement went ahead and they took over Sanghi Industries, the result was not very, very great for Sanghi Industries because everything was in favor of the parent, which is the Adani Cement Group. So because of that, I think that support goes out of the way. Open offer, I think, ended last week. So with that getting out of the way, the stock is down. And as Prashant mentioned yesterday, I think it was higher.
Yeah, it was higher yesterday. The other Adani takeover recently has been ITD, right? ITD Cementation. And that one has gone the other way. I mean, I think since the offer finished, I mean, it was lackluster for a while, from 500 to 800. It was $500 on the 5th of May, and it's at 800 now today. So that's been a very, very sharp move, which has come through on that one. It's up 3.5% today as well, I think. Yeah. Otherwise, I mean, it's it's 1,200 up, 1,000 down. So market breadth is now sort of swung the other way. And we will keep an eye out on things as we go along. I think anything new, anything else? Ask Auto, that's up 9%, is coming up with some 9%, big volumes as well. So that's why I'm mentioning that here. LG Equipment is up about 4%. Mangalam was talking about DMart. DMart's now moved up a little bit more, 2% higher on DMart as it sort of forays into the largest state in the country, Uttar Pradesh. And so on and so forth. So lots of stuff. JSW Infra is up about 2%. Uno Minda is up about 2.5%. So that's the state of affairs this morning. Just a quick word, Mihir, if you will, on I don't know if you have a view, and there aren't that many listed, but there are a few solar stocks. Every time there is news flow out of the US with regards to the thrust is, of course, geothermal, nuclear, even coal. But not renewables in that sense. In the US, with regards to these tax credits, etc., we've seen two developments last night and stocks, etc., sold off. Does it have implications for India? Companies have told us when we've spoken recently, companies like Premier, etc., that there's enough demand, at least for the next 2-3 years, till enough supply comes up to meet the demand. So exports is like an optionality. What is your sense?
Sure. So in the renewables space, we are playing across the spectrum, solar as well as the wind part. But we will not typically take an exposure in cases where there is a dependence either on subsidies or on exports, because the US situation has turned adverse ever since the likelihood of President Trump coming to power has been there, and that's because this is not an area of focus for President Trump. So to that extent, over dependence on exports is something that we have avoided. We are positive on the generators in the renewable space, because I think the government is very serious, and any input price reduction, whether it's at the domestic level or from China, only helps the generators. So I think we would stick to the energy generators, and in certain cases, the equipment providers in the wind space.
Okay, all right. President Trump's not too focused, it seems, on renewable in comparison to what the street expected, but he's quite focused on drill, baby, drill. Mihir, if I got it right, I remember in your earlier avatar, you were focusing on some of these pipe companies, and you got the timing very, very correct, on a couple of these pipe makers. With the kind of focus we have seen on oil, crude as well is fairly stable at current reckoning. Do you like anything from that pack? The notable stocks are Welspun Corp. You have Jindal Saur as well that corrected a big deal, but they as well are putting on capex. Smaller players, Man Industries as well has ordered a couple of big order wins. So it seems big orders coming out of the Middle East. President Trump as well, out there, they are laying various pipelines. What do you like from this space?
You're right. We have one of the names that you did mention in the portfolio, and the reason is exactly what you said, that both in the Middle East as well as in the US, there is a case for more drilling, more production, and some of the companies that we own also have facilities in the Middle East as well as in the US. So they will tend to benefit even if there's a US Atmanirbharta, so to say, situation.
Right. Where do you stand on autos? Because as we speak, we're seeing some traction in names like TVS Motors, a lot of the domestic focused names that you like. And if you believe that consumption is likely to pick up, at least in the discretionary end of things, is there a play out there, or you would stay away from autos for now?
So in autos, we have more exposure in the auto Ang space, but that's on a case-to-case basis, not taking a call on the segment growth. But in the OEMs, we have two names. One is a two-wheeler name, and one is I would say a mix of SUV and tractors, because we do see high-end, as we mentioned, high-end consumption, which includes SUVs. That's doing quite well even now. And rural economy is picking up, so the tractor segment is going up. So we have stocks which OEMs, we have exposure to that segment. And in the two-wheelers, we have a name which is anyway quite strong, and which also has a decent exposure to the EV two-wheeler segment.
Okay, well, thanks very much, Mihir, for joining us. You may want to